Hey folks, Dan Frio here with your closing bell. Now, I usually don't do a closing bell, but today I had to. Okay, here's the reason why. Inflation numbers came in today, and they're coming in tomorrow as well. What we got today was the producer inflation numbers, and it was basically double what was expected. So my thought was, and normally what would happen is mortgage rates would spike. Okay, so that's what would normally happen. Today, I want to show you what happened and then give you my concerns. Okay, so right through here, here's where the bond prices went today. So if you watch my channel on a daily basis, you understand what's going on. We follow the mortgage bond market. Okay, why? Because the yield on this thing is the biggest component of your mortgage rate. Okay, so here's what happened today. You have to look over there. That's where the day started. Think of it as a stock, and it went way up to that point. Okay, what you have to understand in the bond market is the price of a bond goes up, the yields or mortgage rates come down. So we had the producer price index coming in today, and I'll show you those numbers. They actually came in about double what was expected right through here. The producer price index month over month came in previously at 0.2. It was expected to stay at 0.2. It went to 0.5. So the first thing I'm thinking is, okay, inflation's going to rear its ugly head. So we're going to have a huge move in the bond market today, pushing rates up. We didn't. Okay, so I'm going to say let's not look a gift horse in the mouth, because tomorrow we have the CPI number coming out. This is the consumer inflation numbers. I have a feeling it's going to be hotter than expected, and I have a good feeling that the hotness isn't going to do or have the same reaction as the PPI did today. I think what we're going to have tomorrow is mortgage rates increase a little bit, depending on how hot these numbers are. So I'm erring on the side of caution. I can be wrong, but there's a huge move in this market over the last 48 hours that I want you guys to take advantage of if you can. Okay, so that's where we are there. Now, I do want to put this into context. This is absurd. Okay, and I know I'm all over the student loan stuff, but now look what's happening. The Educational Department just announced the highest federal student loan interest rates in more than a decade. What they're doing now is they're increasing rates on all the student loans. They're increasing the rates. Yeah, I said that right. They're actually increasing rates on all the loans, and it gives you captions through here telling you where they were, where they're going to, and so forth. But you're trying to help the students by forgiving their debt. But then the ones that aren't getting forgiveness, you're actually just taking it out on them. It's kind of like, when you start giving all these benefits away, and then the only way to really compensate for it is you have to increase taxes. Okay, so that's where I'll leave it at that point. Okay, but I want to explain to people also, life isn't, or the whole economy isn't crashing for everybody. There is inequities somewhere, and it's throughout the country. Let's look at this chart. This is how much disposable income people have after they pay all their bills and everything. If you look at this context, let's look at what this is history. So here's how much money people had in the banks throughout history. And you can see right through here, an anomaly happened. In 2019 and 2020, people had the most money they've ever had in history. Okay, how'd that happen during COVID? Well, it did. Stimulus packages, not having to make mortgage payments, not having to make student loan payments, and everything else. So at that point, I called, we're going to have inflation out of control. But you can see the main point of this chart is you can still see where people are saving. So unfortunately, based on things, I'm not going to get political here, there's still people with money that are still making more and more and more money. If you're in middle to low income, you're getting hammered right now. So there is inequities, and it's proven right through here as well. So that's why I just wanted to give you guys that report today to show you just some inequalities that we have, and it's even pointed out right through here. If you can make a student loan payment, well, they're going to hit you even harder because they're increasing the rates. But the whole point was, if you're out there and you're a mortgage advisor, you might want to look to lock in your clients today, because the CPI number coming out tomorrow is I'll say it's more than concerning when it comes to the top priorities on my list and what I'm going to look at tomorrow for economic data, and that's the number one piece that I'm going to look at. So hope you find value in this channel. And again, my name is Dan Frio. I'm actually a mortgage loan officer, mortgage broker. I'd love to help you if you're in the environment of maybe looking to buy your first house, maybe buy your first investment property, maybe even a refinance. So if that's what you're looking to do right now, and you find you like my videos and so forth, reach out to us. We'd love to help you navigate this mortgage environment. Thanks for watching. God bless. Have a fantastic night, folks. See you tomorrow. Bye-bye.